Alrighty, traders, welcome. It is Tuesday, December 5th, 2023. Let's get into the trading recap and the market for today and take a look at what's going on. We had a good day overall in the market. Let's see how the market fared. So SPX did drop just fractionally on the day, just slightly lower on the session. A SPY down 9 cents on the day as you just continue to work sideways. And we did this with a few other underlines, but it's not what I want. But we're going to draw this little box here, and we continue to be in this really tight trading range now for really a couple weeks, almost 2.5, not quite 2 weeks. So about 2 weeks right now in this box, which is well above the gap down here that at some point I think we may try to fill. But just hanging out in there. Is it a bull flag pattern? Potentially. It's a good consolidation pattern. The weekly still pretty strong. Things are moving up nicely. You got this little flag pattern going on here, which typically gets resolved to the upside. However, MACD has been dropping. RSI been overbought for so long, finally maybe dipping below yesterday and then just flatlined today as there was no movement in the market. I don't think a good pullback would be helpful and healthy for the market. I'd love to see us pull back right to the 21 and then we can move higher, but we'll take what the market's giving us. And right now, the market's giving us just this consolidation zone that's in here on SPY, and I haven't seen us move out of there yet. It's really about a 6-point range, 60 points on SPX. So it's a pretty tight range that we're in. If we take a look at the Qs, we did have a decent day today. Qs were up 0.25%. This one has had a decent pullback to the 21 and now maybe starting to bounce off of that, even though the MACD and RSI on the daily are a little weak, maybe a little rolling over here on the weekly. One thing about SPY, though, to take a quick look at here is the weekly's a lot stronger here on SPY than it is on the Qs, but the Qs, getting that little pullback in here as tech just took a little bit of a breather, and now let's see what happens to tech as we move forward. On the IWM, did have a little bit of a breather today as it looks like a lot of people were rolling from tech stocks, so the Qs, into small caps, the IWM. That reversed itself a bit today. So we got tech stocks getting some buying back in there, which then saw IWM selling off. MACD maybe rolling over a bit with RSI dropping. Let's see, the weekly is still pretty strong. And I think we're just in a no man's land area here. You had a nice rising triangle, broke up big on one day. A couple of days of down, not unheard of, considering that we had moved well up above the 3 ATR and the Bollinger Bands, and now we're back inside that range. So still good constructive look to the market. If we look at where we are on the percentage of S&P 500 companies above their 50-day moving average, this continues to stay elevated way up at that 82. And when you look at it, that's pretty close to this 90 level, where every time we've hit that 90, we simply seem to reverse and head lower on it. So we're close. We're not there, but we might be still in that overextended rate. If we don't get any kind of a further push here, then if this starts to really drop down, I think we get some more selling. Put call ratio, I haven't looked at it in a while on the standard chart, and I like to take a look at where we are on the put call ratio here. And as the put call 10 moving average continues to move lower, the markets continue to stay higher and power higher. So this has been dropping, and while this drops, okay, the market continues to gain in there. So question here is, when does this stop? Now you're starting to get to almost an oversold area, which means, potentially if we get below this line and start to reverse up, then you start to see that during that particular point in time where the market moves up, or the put call ratio average moves up, the markets typically will move lower. So You've got S&P companies above their 50-day moving average at really an overbought area, meaning that we could reverse from here. You also have the put-call ratio that's been dropping, which has been very bullish for the markets, almost to an oversold area, that if it reverses, that's also going to be a bit bearish for the market. So I think those are some things we keep an eye on. If we go back and look at the VIX, VIX just dead, still staying around the 12 mark here. VIX is doing nothing. Down here, volatility is incredibly low. The US dollar moved up on the session slightly today as it continues to power higher, trying to break this overall downtrend. So a nice little bounce here. Question is, do we hit the 21 EMA and reverse? We'll see, but MACD continuing to move higher with a crossover today, and RSI continuing to move higher. So I think it's very good constructive movement on the dollar for a little bit of a bounce on the dollar. TNX rates dropped, pretty good today, dropping all the way down to 4.171%. So 41.71 on the TNX on the 10-year. We continue to see rates really just selling off heavily for no, in my opinion, no real reason. Do we think the Fed's going to reverse? No, the Fed's not looking to reverse anytime soon. So I think you got to take a look at why are rates just dropping unrelentingly like this? Is it, what factors are coming into play? And inversely on TLT, you had a pretty good update today, another nice gap up, and this thing just continues to power its way higher, and we'll keep an eye on this uptrend. But overall, pretty good uptrend on TLT. If you're long, good stuff for you. And it's been moving higher decently. All right, taking a look at some of the different futures today. Aussie dollar taking a pretty good hit. British pound taking a pretty good hit again. The Canadian dollar taking a pretty good hit, and the euro taking a pretty good hit. All because we are starting to see some strengthening in the dollar, and as the dollar continues to move up, this is going to adversely affect some of these. However, I think these are starting to play into our hands for a 1-1-2 trade, but not yet. I'm gonna hold off while I'm putting the 1-1-2 on, probably 6E or maybe 6A, which are two of my favorites here, as MACD and RSI in the daily just heading lower. And I think until we see those starting to base out a bit, where does that happen? I don't know. I mean, do we come, we're down to the 21 EMA on the Aussie dollar, and then on the British pound, we've broken the 21, we're down to the 50. So we've really had a pretty good down trading session on a whole for these, and breaking a bit of a support line or the uptrend line here. So nothing to do, no sense catching a falling knife. We just let those things play out, and we'll see how it goes. All right, on bonds, we've already covered this with TLT, but just bonds continuing to power higher, and that's really fantastic for our 1-1-2. We're at a 92% probability, or 92%, I'm sorry, P&L, since we opened this 15 days ago. Most likely we'll take that trade off tomorrow, unless we really see something that's going to send those bonds lower. Great trade. If we were going to drop into the trap, we'd see some weakness. There's just not much weakness in bonds here on the 30 or the 10. Oil today dropping again. Oil now finally potentially cracking the bottom of this box that we have been in for almost 4 weeks now. So oil, S&P, or sorry, oil MACD heading lower, RSI heading lower, breaking below the box. Still a little bit bearish on oil, and you're getting a PSAR bearish reversal signal today. Let's see if oil puts in any kind of a bottom here, or do we head down to 70 or so range on oil. Right now, that's perfect. It's playing absolutely perfectly into our 1-1-2 trade. We are at about half of the profit of the PDS already. So we're up 193% on one of our 1-1-2s on oil, 193% on one, I'm up 33% on another one that's only been on for 14 days. We're up 35% on one that's up 32 days, and it's just starting to hit the trap now, which is all good. And then we also have a strangle on, which is up slightly as well. So all good on oil. I think as oil falls here, let's take a quick look at the volatility before I say much else. But as oil volatility, it's been elevated. It's been up and down, falling a little bit more recently here. So oil volatility is off of its highs. I'll draw a little trend line just so we can keep some sort of a semblance of direction here. But good size drop today, which is really good for us because as volatility comes out as premium sellers, we're doing really, really well. But it's still elevated enough, way over its halfway point, over the 200, which it's close to. So as long as we're over that 200, then volatility is decent. If we break that 200, then we'll lose some of that volatility opportunity in oil. But I think it's at a good spot for a potential 112 soon. And then gold, which had a really wild 100-point reversal day yesterday, followed through with some selling today, coming to the top of the gap here. So do we get a gap fill on gold down to the 21? MACD, RSI falling on the daily. On the weekly, just 1 week doesn't make a trend for us, so we'll just leave it at that. But this nice pullback on gold giving us another opportunity. We've got some strangles on gold, which this pullback has certainly helped those quite a bit. So those strangles are pretty decent shape right now. And then we've got a 112 trade, which is down because we had some of that down move yesterday and today. But we're still in pretty good shape as long as we're staying above the 200-day on gold. I think we'll be in good shape. And if we can fall a little bit more, enter our trap around 2010 here. So we'd have to break the 21 EMA on that, which could pay off for us. And then we'll jump into, we'll skip most of the futures. We'll take a look at live cattle today. So this trade, nice bounce off of the low from yesterday. So it did close at some lows yesterday, but completely bounced again. As soon as it hits that bottom of the Bollinger Band, it has a tendency to bounce, Bollinger Band, bounce. That Bollinger Band is tightening up on this move today. Doesn't mean that's where it's going to stay, but we'll keep an eye on that. But you have a falling wedge here, which could also become bullish. RSI moving above oversold. So if this gets moving and MACD gets moving on the daily, we could start to see some decent reversal here on live cattle. And I think they'd give us another chance, I think, to get in on another 112 trade. So we've got one on just from 4 days ago. I'm going to put another one on today. However, if we start to take a look at volatility, if that volatility continues to move up on live cattle, I think a 112 trade here or potentially another strangle might be something to take a look at. And then that gas continuing to sell off. Little bit of a nothing day today. MACD trying to improve while RSI is not. All right, let's take a quick look at the major sectors out there. Anything to be had in here? And really, you only have 2 sectors in the green today at all. So pretty broad-based rally, but not or selling, but not super negative. Tech stocks were up, which is why the Qs were up as we continue to build that a little bit of a pennant or flag out here, not really a pennant, but in this little bit of a bull flag on this. We'll see what happens on tech, bouncing off the 21 EMA here. And then if we look at XLY, consumer discretionary, powering up decently, breaking out of this ascending triangle here a week ago, and then moving higher slowly. I don't know how much more upside it can get, but it looks pretty good. And if we look at what's not performing, well, retail just giving back some of its overdone gains as it crossed the 3 ATR yesterday. Oil falling decently on the session. Energy falling decently on the session. Your gold miners, nice pullback here. I think this is an opportunity potentially if we look at a trend line that we could draw right in here, and you can really see it starting to build. You got this trend line from this previous pivot point here previous resistance here, previous support, a gap up, and support here. Now, and it bounced today. So gold miners, I think these look interesting here. MACD and RSI doesn't look fantastic. So could we get a little more downward or sideways action? Potentially. But I like where we are on the gold miners. And then just running through, yesterday was a pretty red day on most things. Today, quite the opposite. So most of the major tech stocks with the Qs moved up. Apple up 2%, reversing, having a PSAR bullish reversal. Microsoft bouncing off of and up above the 21 EMA here. Amazon also having a pretty good day today, bouncing off the 21 EMA. Meta was one of the few down stocks on the session. So you had Meta, and that's really it as far as the Magnificent Seven go. But really not much of it, down to 0.7, pretty fractionally small, 0.5% down as MACD and RSI continue to fall. We'll see if we find some support here around the here around the 50-day exponential. Google, nice bounce off of the two ATR and the Bollinger Bands today. So a decent bounce for Google. NVIDIA, nice little bounce back above the 50 exponential moving average. And Tesla up, but finished off of its highs on the day. As this thing struggles to figure out what it wants to be, you're getting tighter and tighter and tighter here. Something's got to break one way or the other. Last couple of days look like it may be the downside. Today, getting a decent bounce up. So we'll see what happens on Tesla. I don't think I'm playing anything yet until we get a break one direction or another. So there's where we are. One thing I wanted to jump into before we move on too far on some things here is if we take a look at the FedWatch tool here, December, basically no rate change. Okay. January, we're looking at an 85% of no rate change. And there's a small 15% cut. I think that's crazy. I don't think that's happening. But then we go to March, and now we're starting to see in March a 57% chance of the Fed cutting rates in March. I think that's pretty soon, but March is still a ways away. So March 20th, we have 4 months to get there. So we have most of December, January, February, and a good chunk of March. So about 4 months away. Anything could happen. We could see some significant signs of inflation easing. We could start to head into a recession, any of those things, but you're not about 57%. And if we look at May, it's actually even further down. So they're thinking 40% chance of a definite rate cut by then. But it's really an 80, there's only a 9% chance that rates will be the same by May. They're expecting a 90% chance that there will be a cut before May. And now you're starting to see a 50 basis point cut by May starting to creep up into there. And then when we get into June, you're seeing even more, a 75 basis point cut starting to peak out. So, what does all that mean? I think we just sit and wait, but I think it's going to definitely take a slowdown in the economy, an increase in unemployment, potentially some recessionary work for the Fed to cut. And I'm not sure that I'm 100% in agreement, but maybe March we'll see a cut finally. All right, got a new trading plan that's coming out. So if you're a member in the service, we'll release this week. Got some final tweaks to it. I've added an extra rule, and then what I wanted to spend a minute on today is just looking at some trading account strategies, just so you get a sense. I know I may have touched on this. Account size right now is 330,000, so I did make some adjustments. Our goal every month is 9,900, which is 3%. Target buying power then would be 50% of where we are, which is technically 165 now, in a strategy max about 80%. Or so, because we will go up to now 50% of our total buying power in any one strategy. But we're still going to be heavily on the long-term 112 trades. That's going to use up the majority of the buying power there. Still putting 2 on a month with a quantity of 2 each. So that means I'm going to have 8 total working at 2 contracts each. Of these should generate about 4,400 a month. That generates about half of our income that we need. I'm going to start to look to increase this, potentially see where we go. And then strangles on futures. We're going to try to keep about 6 of these running: ES, CL, GC, and anything else that comes up there. But those 3 primarily, and then we'll throw in a couple others as we see some good volatility opportunities, generating about 3,700 in cash each month, using about 40,000 in buying power for those 6 strangles. 112 on futures. 4 is the max. I have more than that right now. So as we look at where we are, I definitely have more than those. If I take a look at my 112s, okay, there's 1, 2, 3, 4, 5, 6, 7 of those on currently. So we have more 112s on future because we have buying power availability with our BP being down a bit. So I've actually got 7 of these working, and that's generating some good income as well. Most of these will generate roughly $1,000, so anywhere from 800 to 1,800 in cash per trade. If they're 60 days, that means I would expect of the 7, 3 of them to come off each month, maybe more. 4 is my minimum, so I think I can generate over $2,000 a month there, and then some spec trades. So I just wanted to share a little bit of the updated trading plan with you, so you get a sense of what I have, and then the rest of the plan details all of these strategies and all of the mechanics that go with them. And let's just take a look at the daily move today. So on the session today, we ended the day with delta still slightly negative. So we are slightly delta negative, but it's really pretty delta neutral. You can't get more neutral than 0%. Theta 1214. It's a good theta overall, 0.37%, down fractionally, but we'll take roughly a 0.4% theta. That's what our goal is each month. Net Liq jumped up today. A nice day today, up over $5,000 on it. So we're up to 331. We're just at the all-time highs again, just underneath the all-time high on the portfolio. And BP usage crept up just a bit, 240, 297, which puts us at 72%, again, of which 10% of that is in BIL, the Treasury ETF, 0 or 1 to 3 month Treasury ETF. So because I've got 10% in bill, I really don't count that as utilizing my BP for trades. So I'm really at 62.49. It's more than 50. So it's a little heavy right now. And I think we'll just let a couple trades come off. But really only takes 1 trade or so for that thing to just drop back into the 50 range. And we're up $2,000 on the month from closing a trade out, a 112 trade out, or at least partial 112 trade out on the first. My guess is tomorrow we'll probably close our ZB 112 trade. So we should close that out for probably 700 and some odd dollars tomorrow. I think we'll also be looking at some other trades. We are close on ES. I'm just looking at my trades right now. We've got a January long-term 112 trade at 91% target profit so far on the naked put. My guess is that's going to come off any time now. That winner alone is going to be close to $3,000, so 2,900 on that particular point put. So that's a good one we're looking at. We're also sitting at 89% on the January 31 long-term 112. That's over $3,000 in profit, but it's not at 95%. So I'm going to leave it on for now. There's no sense to rush right now. I don't need to book them. I don't need to do anything. And because our bidding power is a little elevated, I'm not going to put too much on. Anyway, if I see something I got to put on, I'll close one of those early so I can get something else on. Otherwise, right now, that's the best use of the cash that we have. And overall, again, we're still sitting at 101,794, but I expect that should go up unless we have a loss. So we can still go backwards. but we're up $102,000 on the year, which is 41% return. So there's where we are. Good stuff today. Like what we're seeing in the market, it was a healthy up day for us on the Net Liq side. Didn't close anything, didn't add anything, no stress trading. And that's really what I'm trying to advocate to you here is no stress trading, right? I've got long-term 112s on. Those are 4 months out. How actively do I have to manage a trade in it's out 4 months? I can look at it probably once a week at most. I have strangles at 90 days. Okay. Don't really need to actively manage those. If they start to get into trouble at some point, I'll start looking. Otherwise, I don't need to do anything. I don't manage or adjust my strangles. I put them on and they either hit my profit target or they come up. I'm not going to monkey around with it. I don't have time for that. 112s on futures, those are 60-day trades. There's almost nothing to do on those for the first 30 days at all. So really not a whole lot of management there. I don't have any 0 DTE trades that I've been doing this month. I'm not doing any leap puts at this point in time. And I really only have a handful of spec trades. And the spec trades that I do have on right now in this account, there are, and mostly these are bear trap trades. So I've got a BA 112. I've got 3 FB 112s. One of them is a tiered 112. So there's technically 2 trades on. One of them is a tiered FB 112. I've got 1 naked put sitting out there in oil. And then I have the new bear trap trade that we put on yesterday. Nothing really needs active management at all. We just let it go. You could take a day or 2 off here, enjoy the holidays. Don't get caught up in everything here because overall, things are in good shape. Okay. We can sleep at night. We can rest easy. We don't have to spend hours in front of our computer. We just let the plan work, and we do not have to be actively hands-on trading every second of the day. Okay. Enjoy the holidays. Enjoy December. Okay. Enjoy your family. Okay. And make a bunch of money at the same time. We're up 41% this year without actively managing a whole lot of anything. Right. And we'd probably be up more if we didn't do some 0 DTE stuff earlier on in the year that clobbered us for a decent little loss. We'd be up another 4% on the year because of that. And we wouldn't have any stress. Okay. I don't have stress now, but certainly would be something to take a look at. All right. So we just went through a little bit of the Fed watch. Are they going to cut rates? Maybe not till March. We'll see what happens. Right now, no stress trading. Let the 112s, let the strangles, let them all start to work for you. Okay. Have a great rest of your evening, everybody. If you like this video, please click that like button down below. It would really help us out. Go ahead and subscribe to this channel. And if you want to see what we're doing and learn the strategies, learn how to build your trade plan, we're actually going to do a session tomorrow with all of our members. And several of them submitted their trade plans. We're going to go through and review their trade plans tomorrow. So great learning opportunity. If you're not a member, it's a good time to do that. Okay. In the description below, you'll see a discount code. You can use KING, get $50 off the first month, trading right then and there. Jump in tomorrow, see what the session's all about. Igor did a fantastic 112 trade session today in there. So awesome stuff for our members. There, you're getting multiple Zooms a week now. You're getting stuff from Igor, from myself. We had Gabe on last week. We're going to have some new people on next week as well. So Ed, I think will jump in. We're going to do some fixed income reviews next week, and we're going to review portfolios tomorrow. If you're not a member, get in there and get your finances right before the end of the year so you can kick next year off and running. All right, everybody, take care. Have a safe evening. We'll talk to you guys later. Bye-bye.